right, peeps, it's your boy here again with a long video this time. Alright, what we got right here is something from our lovely stock waifu, Kathy Woods, and she's going to break down her portfolio and what she thinks is going to be the emerging disruptive industries that she's so good at and that makes us so much money. And I'll give you my thoughts at the end of it. But if you like what we're doing here, please like and subscribe, share it with your friends so we all can make this work together.
Innovative forces in the ETF world today. She's also one of the most successful. Kathy Wood's signature ARK Innovation Fund returned an astounding 148% in 2020, and she says there's still a lot of runway ahead. Kathy's the founder, CIO, and CEO of ARK Invest, and she's with us now in our ETF Edge along with Bob Pisani. Kathy, it's nice to see you again. Welcome to Halftime. Bob, why don't you start us off?
Kathy, great to see you, and what a tremendous year it's been for you. You now have over $50 billion in assets under management, and your flagship ARK Innovation Fund's up nearly 20% this year alone. But I've got to start with your biggest holding. It's Tesla. In the ARK Innovation Fund, it's also in the Next Gen Internet Fund. It's also in the Technology and Robotics Fund that you run. How do you feel about Tesla's price now, and are you still adding to your position?
Yes, well, as you know, we report our trades every day, and you will see that we have been adding to Tesla. Our confidence in Tesla has grown as we've done research on what ride sharing potentially could add. It could limit the risk significantly. It's a much more profitable business than electric vehicles. And we do think, even though I think there's some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy, and we think they will decide to do that. I don't think anyone has in their models anything for ride-sharing. And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real-world driving data. No one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous we believe is going up, and therefore our price target will probably follow at some point.
Okay, and Bitcoin is on everybody's mind right now. Your Next Gen Internet Fund has a very large position in the Grayscale Bitcoin Trust. So your thoughts on this? Your thoughts on Bitcoin, a Bitcoin ETF for 2021, is it coming? And do you have any concerns that the Grayscale closed-end fund still trading at a pretty significant premium?
Well, the premiums come down quite a bit. I think now that we know that the next SEC commissioner is going to be David Gensler, who spent the last few years at MIT teaching a class about blockchain technology, Bitcoin. I think he understands the technology and he understands the currency itself. So I think the probability of an ETF has gone up. We also know that the director of research for crypto in the crypto space at the SEC has been promoted and will be reporting directly to Gensler. So again, I think we have individuals now involved who really understand the space. And I think the likelihood has gone up. What has surprised us, we expected institutional interest to pick up this year, and it certainly has. But the way in which it's picked up has surprised us. I don't think we ever thought there would be broad-based substitution of Bitcoin for cash on corporate balance sheets. So we find that very interesting.
All right. Let me break in right here. What she's saying here is they didn't think that Visa, MasterCard, PayPal, Apple would be taking Bitcoin as a one-to-one payment for their services, which they are, or they're in the direct process of doing. So when Tesla came out and said about 3 weeks ago that they're in the process of figuring out how to take Bitcoin for their vehicles, their service, XYZ. That made the corporate side of America and the world as a whole lose their goddamn mind. And FOMO, the fear of missing out, hit the corporate world like none before. So now you have banks, businesses, everyone in between bending over backwards to figure out how to get in on this massive crypto slash, Bitcoin, Pi, XYZ gold rush, because they don't want to be left behind having to buy all these products when they could just be in the forefront of it and be selling these products.
If all corporations in the United States were to put, I think it's, 10% of their cash into Bitcoin, that alone would add $200,000 to the Bitcoin price.
Hold on, gotta pause again. All right. When this video was taken, so it was taken about 18 hours ago, Bitcoin was around about 52K. Let's say 53. So that would take Bitcoin from 52 to 53K to $253,000 USD. That would be massive. There'd also be no fucking Bitcoin left to go around unless you were mining it. But that would be massive. I don't think it's gonna happen. But it'd be real interesting for us who got it if it did.
Now, we obviously do not believe this is going to happen very quickly. We're talking about maybe the equivalent of $900 billion market cap equivalent for Bitcoin. That's less than half the price of the Apples and Amazons of the world. So this has to mature a little bit before broad-based adoption can take place. But we're very reassured that companies like Square and Tesla have chosen to allocate. They're on the right side of change when it comes to innovation, and therefore we think it's wise that they diversify some of their cash. And I think the biggest surprise to many Tesla doubters is that it is now in a position where it has that much cash that it is diversifying.
Now, you've been directionally right on a number of other big stock bets, including Teladoc. This is your largest holding in the Genomics Revolution Fund you run. It's also a big holding in the Innovation Fund. It's up about 40% this year. It's got a $40 billion market cap right now. This is telemedicine. Is telemedicine really going to continue to shine once COVID recedes?
Well, we had a great opportunity to buy into Teladoc when the stay-at-home stocks were starting to flatten out as the vaccine was on the horizon. Teladoc was one of those stocks, and it then was hurt by an acquisition it made, Livongo. This is a beautiful acquisition for Teladoc. The most important variable, again, I'm going to come back to AI over and over again, because we think that is going to represent $30 trillion in market cap during the next 10 years. And we are just beginning. So with Livongo, Teladoc now has one of the best artificial intelligence teams and some of the best data. That's the other thing we'll come back to. Most data, best quality data. And we think the combination of Teladoc and Livongo is going to be a powerhouse. One services more the acute setting in medicine, and that would be Teladoc itself primarily. And Livongo is more involved on the chronic side. So chronic conditions, kidney conditions, mental health, and so forth. So we believe that with this data, these two companies, now that they're together, now that they put their AI teams together, are going to be able to help make the healthcare ecosystem better, cheaper, faster, more productive, more creative. What we say about all kinds of innovation, they're in a beautiful position to do this.
Kathy, it's not just Teledoc. This is Scott now. It's not just Teledoc out of your signature innovation fund that has enjoyed spectacular gains over the last year. I'm looking at the list of your top holdings, whether it's Spotify or Shopify or Zoom Video, for example. The gains have just been tremendous. I'm wondering what happens when we get on with the rest of our lives after COVID, and how do you think about taking profits, even though I know your typical sort of outlook is a 5-year time horizon? That doesn't mean you can't take profits every now and then and redeploy capital elsewhere to some of the laggards, perhaps. How do you think about that?
Sure. Well, the last year has been instructive. During the coronavirus crisis, we consolidated to our highest conviction names, especially those that were tormented by, I would say, algorithms who were looking for small cash cushions and cash burn. And so we had great opportunities to buy stocks at a fraction of the cost from just a month earlier. Certainly Invitae and Zillow were two of those stocks.
All right. The polls are wonderful stock waifu, right quick. She's right. If you believe in a stock, or if you think a stock is undervalued and it's in the red, like if it's a red day, like it's been for most of this past week until Friday, and you know that this is just a temporary red day, think of it as you go into the store and you've been eyeballing this thing for months, and you just randomly walk into the store and it's marked down 10%. Odds are you're going to buy it. Think about the stock market the same way. On a red day, on a solid stock, that's just a discount. And that's why you always need to have a little bit of money to put into a stock. Even if you only got like $20, put that 20 in there on that red day, on that good stock, and you'll profit.
And then they've had magnificent runs. Many, Square would be in this category as well. Many are up 5 to 10 times. Tesla is also in that category. There was a lot of fear about its condition. And then what you saw was the stay-at-home stocks start to flatten out. So toward the end of last year. So some of the stocks into which we had concentrated our portfolios, they were up, as I mentioned, 5 to 10-fold. We started moving back into these stay-at-home stocks because it seems to us that many analysts and portfolio managers believe that after the vaccines make it through our population and the rest of the world, that these stocks will be done. We actually think that that innovation makes the world a better place generally in the ways I described earlier, and that the coronavirus has accelerated the shift towards these new ways of doing things, these new ways of spending time. So we were happy to get the reprieve in some of these so-called stay-at-home stocks in the last, I'm going to say 6 months. It really started in July, August, giving us time to move out of some of the names that had taken off and into those that were marking time. So that's what we do. We are considered a liquidity provider, which means when people are selling, we will be buying. And when people are buying, and these are investors in retail and institutional, we are likely to be taking profits. As you say, taking profits is never a bad idea.
Well, can you envision owning, for example, a Zoom in 2 to 3 years? Or will you have moved on to something else because the world has changed?
Well, I think the world is changing because of Zoom. And I think we're going to be working very differently in the future. Sure, there's going to probably be a combination of in the office and stay at home. But now we know it's possible. We look at Zoom in the context of the tech stack. And if you look at the tech stack, the enterprise communications layer is the biggest. It's a $1.5 trillion layer. This is where Zoom is playing. And they're starting to add features to their services And I think all of us will agree, my experience with Zoom is it is the best platform for video, is the easiest user interface, and I do believe that it will pull away from the past.
All right. From everything she said, she's right. Like, the world is, as much as some people hate this phrase, this is going to be the new normal or some variation of it. Like, people are going to be working hybrid if you can. Work from home is probably going to become the standard now, especially because businesses now realize they can get more optimal work done, not have to pay overhead for office building, and they can hire people who don't readily have automobiles to do jobs from their own place that they now pay for. It's a win-win for the corporate people and the workers. So I don't think that's going to disappear overnight once COVID disappears. This is how the world is going to work now. We're moving into a more digital technological age. And one of the big points I want to hit before we leave is what she was saying when she was talking about the two companies with their AI teams combining. We now live in a world where information is everywhere. If it's out there, you can find it. But therein lies the problem. There's a crap ton of information and very, very little curation. So if you can curate and digest that information in a feasible amount of time, you're going to be the one who profits, who can get ahead of the bull, who can get ahead of everything, and then everybody starts following you, or you've already started making profits before everybody else has. That's what Kathy is really good at. She's good at processing and categorizing information and then acting on it. And that's what we all need to do as well. All right, I'm gonna wrap this up. We're running kind of long. Again, I'm your boy, PCRO. If you like what we do here, please like and subscribe. Check down in the description for links. And I'm out. Peace out.